Product-led growth versus market-led growth. Which strategy is right for your B2B startup? Are you a founder of a B2B startup wondering whether a product-led growth (PLG) strategy or a market-led growth (MLG) strategy is the best fit for your business? If so, you're in the right place. In today's video, we'll dive into the pros and cons of each strategy, examine real-life examples, and help you decide which path to take for your business. So buckle up and let's get started. My name is Patrick of the Founder Revenue Academy, and we've worked with hundreds of early stage founders of B2B startups, all of whom are between MVP and problem market fit. Imagine having a product so amazing that it sells itself. It sounds a little bit too good to be true and a little bit like a dream. So, well, that's the essence of product-led growth strategies. But is it the right choice for your startup, or is a market-led growth approach more suited to your needs? So let's find out. Product-led growth is all about creating a product or service so compelling that it drives growth on its own. In this approach, the quality and appeal of the product is going to be generating the demand and attracting customers, often through word of mouth and organic growth. So popular examples of PLG companies include Slack, Dropbox, and Zoom. So some benefits of PLG include reduced customer acquisition costs. So since your product attracts customers organically, you can potentially save on marketing and sales expenses. So another benefit is higher customer retention. A product that sells itself is usually a strong indicator of user satisfaction, leading to a much higher retention rate. Another benefit to PLG is going to be faster growth. A successful PLG strategy can result in massive and very rapid growth due to strong word of mouth and satisfied customers. However, PLG also has its challenges. There is intense competition. So if your product isn't truly unique or superior, it may struggle to stand out in the market. There's a high resource investment. So creating an exceptional product that drives growth often requires significant resources and effort, not just from a product, but also from a customer support side of things. Market-led growth, on the other hand, zeroes in on specific markets or segments with a tailored value proposition. And so by deeply understanding your target market's needs, you can build a product or service that meets those needs and resonates with your audience. So examples of MLG companies are including Salesforce, HubSpot, and Oracle. So some advantages of MLG are going to be including focused targeting. So by targeting specific markets or segments, you can concentrate your marketing efforts and resources more efficiently. So better understanding of customers' needs is another one. So the MLG approach fosters a deep understanding of your target market, helping you create a product or service that truly meets the needs of the customer. So in competitive markets, an MLG strategy can help you stand out by catering to a specific audience or niche because you're able to differentiate. However, MLG also presents some challenges. There's going to be a smaller market size. By focusing on specific segments, you might limit your overall market size. There's also the risk of market saturation. If the targeted market becomes saturated, your growth opportunities may diminish as well. So how can you, as a founder, determine the best approach for your B2B startup? So let's explore some key factors to consider. It's going to be your business stage. The stage of your business can influence which approach to make. If you're just starting out, an MLG approach may be more effective because it's going to help you identify and also target specific markets or segments. However, if your business is more established, a PLG strategy might be more suitable. So to give you an example, Atlassian, the company behind popular tools like Jira and Confluence, they started with a market-led approach, focusing on the software development industry. as their products gained traction, they shifted to a product-led growth strategy, attracting a broader customer base. The other thing you could do and look at is your value prop. So if your value proposition is strong enough to help you stand out for the competition and drive demand independently, a PLG strategy could be more appropriate. Conversely, if your value proposition is tailored to specific markets or segments, an MLG approach might be a better fit. So Canva, the online graphic design platform, has a strong value proposition that appeals to a wide audience, making a PLG strategy much more suitable. So in contrast, MailChimp, an email marketing platform, initially focused on serving small businesses with a tailored value proposition, making an MLG approach more fitting. You need to consider the competitive landscape. In a crowded market with fierce competition, an MLG approach allows you to target specific markets or segments where you can differentiate yourself. On the other hand, if your product or service is unique and stands out, a PLG strategy could be more effective. A good example is Adobe with its Creative Cloud suite. So this competes in a highly saturated market, but has managed to differentiate itself by offering a comprehensive solution to creative professionals, making MLG approach much more effective. Meanwhile, Calendly, an easy-to-use scheduling tool, has a unique product that appeals to a wide range of users, making a PLG strategy more suitable. A PL strategy can be and is resource intensive, requiring a strong product and effective marketing. An MLG approach may be more resource efficient as it focuses on targeting specific markets or segments with a tailored value proposition. For example, Asana, a project management tool, initially adopted an MLG approach by targeting specific industries such as marketing and product professionals and product development teams. As the company grew, it expanded its resources and capabilities, allowing it a shift towards a PLG strategy. For most early stage founders watching this video, I'd recommend starting with a market-led growth approach. This strategy allows you to test and iterate faster, helping you refine the product market fit and also establishing a solid foundation for future growth. A final example here is Drift, who are a conversational marketing platform initially adopted they initially adopted a market-led approach by focusing on serving B2B SaaS companies. As they refined their product market fit and gained traction, they expanded their target audience and eventually adopted a product-led growth strategy. Both product-led and market-led growth can be effective in driving your B2B startup's growth. But by carefully considering factors such as business stage, value proposition, competitive landscape, and available resources, you can choose the best approach that aligns with your business goals. So remember, there's no one size fits all or no one size all solution. So don't be afraid to adapt your strategy as your business evolves. So good luck, founders, and happy growing. So that's it for today's video. If you found this video helpful, perhaps you consider liking and even subscribing to the channel. There's a link that's going to be down below, which if you click on that, will take you to explain a little bit more about what Founder Revenue Academy does and how we help founders of between MVP and problem market fit. So I'll see you in the next video.